And we continue on with the Radio Real Estate Show featuring Chris Lofthus of the Chris Lofthus Group at Keller Williams Realty. And we always say Keller Williams Realty in Boise. So, Chris, tell the story of, I know you started out, you've got a long relationship with Van.
Right.
And then obviously the two, Van and Aaron, teamed up, Concierge Legacy. Tell our listeners how you guys kind of built this relationship and how you've worked your way having them on the show.
Yeah, I think for the most part, as I recall, it was a mutual friend of ours, client of ours, that kind of put us together, figured we'd be a good fit together, and our relationship's kind of gone on from there. And I'm personal friends with both of these guys as well, and I couldn't speak highly of guys that do wealth management or help people with their finances in general.
All right. You may hear some clicking in the background. Like I said, your show has grown to an all-new level. It's Real Estate Magazine is here, and Jeff Hatfield, who's a good friend of ours from Perfect Memories. And, Jeff, we're going to go ahead and give you a click on there. He's got the Nikon and a plug on there. So you'll probably see some of these pictures on the website. And if this is a guy I recommend, one thing you should, a little marketing tip, you talked about Facebook.
Right.
You got to have a good picture on your Facebook. You got to have a good picture on LinkedIn. And I know you always do that because, Chris, I tell people you got to dress like $1 million. And somebody goes, well, how come you do that? I go, just ask Chris Lofthus.
Yeah.
Well, I mean, I think it's important, don't you? Because that's part of what comes with the packages. If you act first class, you are first class.
Yeah, and that's kind of what we talk about, and that's exactly why I bring these guys on to discuss what they do and kind of what we do. And we take it really serious. We take selling real estate very seriously, and these guys take what they do very serious. And I want to just kind of chat with them about what's going on, and they're going to talk about the fiscal cliff. In the break here, Van was just talking about kind of how things are changing and how things are changing for Americans and how it's going to affect us overall for the next year or so.
All right. With that, we introduce Van Carlson of Concierge Legacy. And Van, we talk about first class. I know when I go to a real nice hotel, I always think of a concierge, and that's kind of your guys' philosophy. The first thing you hear is concierge. And it's like, hey, these guys are it's not a bellhop or something like that. You guys are first class.
Absolutely, yeah. Well, we appreciate that, and I hope that word resonates with people. That's what we want it to be. We do pride ourselves in offering superior service to our clients, and we're not just advisors, financial advisors. I think we take a holistic approach to all of our clients, and we do recognize certain things within their portfolios down to how they're insuring their autos. They're all relative and they're all pieced together, and that's why we came up with the word concierge. We know enough about a lot of things, but we also bring a set of skills of experts in, somebody like Chris for real estate purposes, and I think we bring a great service to our clients for doing those types of things.
And your motto is creating, protecting, and preserving wealth for future generations. What would be, and Van, I don't know if this is a great phraseology of a question. I made up a new word, phraseology, but an ideal client for you if someone's listening and saying, I've heard these guys before, and I think I want to at least reach out to them or get on their website. We talked about the halftime report you guys did at the Arid Club last month. A lot of good information came from that. What's an ideal client for you?
Well, Dave, that's an interesting question actually for us. What we try to do is we take an approach that we like to meet with any potential client. We do a test basically. We do a couple things. We make sure that we have a good chemistry with our clients. The third one is we want a full-on review of what they're currently doing, and of course, the other one is that can we improve them upon what they're doing. And if so, is it the type of client that we want to bring on? So we're selective on who we do bring on as a client. At the same time, we don't shun anybody away. We're here to help in any way we can when it comes to financial needs. And, we're here to talk about the fiscal cliff today. And I think it's going to become more and more important for a lot of people to have outside advice when it comes to managing 401ks, to their own retirement accounts, to, their income. Tax efficiencies, and goes right in hand of what's happening in your return on your investments. So we don't, when it comes to an ideal client, we have it's from soup to nuts when it comes to a client. But what we really look for is, can we add value, and do we have a good chemistry with the client?
Now, when I first came in today, we were running through the show with Annette, and I had talked to Aaron. He said, now you've heard of the fiscal cliff. And I said, yeah, I've heard of it. What the heck is it? Help us out with that.
Well, it's the Economic Growth and Tax Relief Act of 2001, commonly known as the Bush tax cuts. And what's been happening, it's going to due to expire by the end of this year. And what's been happening in the last couple years, they just basically been kicking it down 1 year at a time, not trying to deal with long-term strategies with our taxes, and it's really kind of come to a head. And the fact that it culminates with a election year really doesn't really help us. It may force both parties at the federal level to sit down and come up with some compromises. And we'll get into some details if you want on exactly what those tax, how it affects people, but it's going to play a big part in stabilizing house prices, real estate markets, corporate investment into their companies to create more jobs and all other things. So, when it comes to taxes, we have to have a long-term play. We, as Americans, as companies, as corporations, we have to have an understanding long-term of what the tax strategies are going to be, how that's going to affect us. But right now they're just going year to year, and it's really not helping us. And hopefully they'll get something done by the end of the year. If they don't get something done by the end of the year, and this stuff goes to sunset, there's going to be some dramatic effects potentially for every American, from low income to high income, and that's why the term has been termed fiscal cliff. So that's it in a nutshell, and I know we can dive more into that.
Sure, absolutely. You're listening to the Real Estate Radio Show featuring Chris Lofthus of the Chris Lofthus Group at Keller Williams Realty, Boise. Our guest today from Concierge Legacy, you've been listening to Van Carlson and your partner, Aaron Seehawer. Aaron, I want to ask you on the fiscal cliff. I guess you can look at it good, bad, ugly. What potential actions can be taken? How do you approach this?
Well, first of all, thanks to Chris and you guys for having us on. It's always nice to be able to have sort of a platform like this to communicate to the masses and help people, because we do strongly believe in that. As far as actions that people can take, I think right now we don't really know, like Van said, where it's all going to shake out. I think, as he also said, these potential tax changes and the sunsetting are not here to just affect the wealthy people. There are things that are going to affect the average person, from do they know that the child credit on their tax return is going to go from $1,000 down to $500? And if anybody understands the difference between a credit and a deduction, a credit is an actual netting against your tax bill. That's a big deal. It's a heck of a lot more powerful than a deduction. Some big things that are coming that people need to be evaluating that do maybe have some assets and some wealth is where we're going with the gifting and the unified credit. This is the year of the 5.12 million, and if you're married, you can actually take advantage of that and double it to what we call a double unified tax credit of $10.24 million. We don't know if it's going to go away. We don't know where it's going to go, but you probably should be sitting down with your estate planning attorney, your CPA, your financial advisor. We're dealing with it a lot now, and as Van said, I think when we get closer and closer to the election, it's going to be more and more on the front page, and people are going to hopefully pay attention.
Chris, it's now making more sense why you bring guys like Van and Aaron on, because a guy like me, I'm like, man, that's a lot of clout, and I've got to pay attention to what Congress is doing and the Senate, and how these guys can help clarify that.
Well, yeah, and we discussed this at the break here too, and people don't, they don't know, and people aren't getting the right information, whether it's from their wealth manager or from their CPA, but they're not finding out, and that's kind of what these guys are here to talk about with this, and some other things. But we talk about how much the election is going to change this, and I don't really know, Van. If you talk about this, Van, I mean, we talk about consumer confidence going into the election year, right? You talk about the fiscal cliff. I mean, what's the true effect, on the election year? Is it going to matter who who gets into the presidency, or what? Talk a little bit about that.
We've done, actually, at our halftime report we did at the Air Club, we have some interesting slides, and you know what? as things shake out, it really doesn't matter. What matters mostly is who's in control of Congress and who also is the same office as a president at the same time. So there's some interesting things there. But when it comes to an actual election year, I would tell you from a fallout of economy, good or bad, it doesn't really matter. The fact that we have this the Bush tax sunsetting, it could matter this year. And so, anytime we take out the low income to higher income, take money out of their pockets to go pay more on a tax bill, it's going to affect the economy. It just does.
Well, yeah, you're exactly right. And what I think he's discussing too, it's going to affect a lot of stuff. So, is it going to affect the average home price in Boise? Who knows? We talk about.
I agree.
You just don't know.
You don't know, and I think it speaks to the quality. There's so many more things other than this that affects people why they want to live here. We got a great quality of life, and life things happen. But when it comes to the economy and those types of things, it definitely hurts when this American citizen has to pay more taxes. There's just no doubt about that. It plays with the psyche of the consumers and everything else. So, I do think at the end of the day, somebody's going to come to the table and there'll be compromise. What that compromise is going to be, we don't know, but we do know there's going to be give and take. So when you talk about the unified credit or the estate taxes and the child credit and the corporate taxes, all those things, there's going to be strategies that the Democrats and Republicans are going to come to the table with, and there's going to be compromise. They really don't have a choice. They have to do something. It could become more complicated. Again, making it even more so why people need to stay a little bit more in touch of what's going on with their taxes, and at the same time, how do I build my future going forward based on what I know in taxes today?
Right, and prime example right here. It's having a conversation yesterday about this. It's a prime example of someone buying a house like when the market dumped, right? Here around here, to say take a high-end home, for example, and sold for $600,000, and the tax man's assessing it at $600,000. Someone buys that house for $400,000. They go in, and what people don't understand is they're going to get their money either way. So if you get it adjusted, the levy's going to go up. So I mean, that's the whole point of you talking about this. So they're going to get the money. So everyone thinks they did a great job by going in and getting their taxes reduced, which is fine. But overall, if everyone keeps doing that, they're just going to raise the levy. You see what I'm saying?
And I think the biggest thing, too, we're giving our listeners just a small – I don't want you to feel like we got a whole elephant here. That's why we've got Concierge Legacy is you can go on your website.
And we're not here to scare anybody.
Yeah. You can reach out to Van. It's Van at conciergelegacy.com. Aaron is Aaron. Aaron at conciergelegacy.com. Reach out to these two guys. They will help you out and at least say, hey, maybe we're not a fit. Maybe we are, but let's have a cup of coffee and go from there. Their number's 275-8875, 275-8875. Guys, a lot of stuff here. Let's keep you around another segment, and we got lots more questions. And Chris, I'm just going to kind of sit on the sidelines and take a lot of notes here. So we'll keep on rolling and continue on with the Real Estate Radio Show featuring Chris Lofthus of the Chris Lofthus Group at Keller Williams Realty, Boise.